Well done is better than well said. Words of Benjamin Franklin. Across the pond, William Churchill said, "I never worry about action, but only inaction." As I was preparing for this episode of the podcast, these two quotes really grabbed me. They spoke to taking action to getting something done. In a previous episode, we discussed the importance of having a plan. It's your thoughts, your hopes, and your dreams. And this plan is basically a picture of the end you have in mind at a particular point in time. However, making your big dream come to life involves doing something, acting, and not just periodically mulling over your thoughts. You need to come up with a strategy. Simply stated, strategy is the best plan opted for achieving the desired outcome, the tactics and the actions you need to take to get something done. Today, my guest and I will discuss what having a strategy has to do with real estate investing. Usually, when we think about strategy, you think about corporations launching products, you think about sports such as football, or maybe you might even think about chess. We'll take a closer look at how having a strategy can help you. David Rhodd is a principal mortgage broker who has been helping clients in the GTA over the past 13 years. He has two businesses, a mortgage and a lending business. He is also the author of the book, House Rich and Cash Poor No More, How to Use the Equity in Your Home to Achieve Financial Freedom. David, thank you for joining me today on the Real Estate with Nicole podcast. I appreciate your time.
Thanks for having me, Nicole.
So let's just jump right into it.
Perfect.
As I alluded to at the opening, what does a strategy have to do with real estate? Usually when we hear strategy, sometimes it's in relation to sports like football or chess or, corporate launching products. So what does strategy have to do with real estate?
Strategy has everything to do with real estate because there are so much different ways to invest in real estate in general. So you need a strategy because you need to figure out which one works best for your personality, which one works best for the time that you have available to spend in investing, which one works best for your credit, for your income situation, and for your goals. Some people are looking for equity. Some people just equity appreciation. Some people are looking for cash flow. Some people are looking for mortgage paydown. So there's so much different strategies that you need to strategize to figure out which one works best for you.
Got it. So basically, you have this big dream, which is your goal.
Of course.
And it could vary for various different individuals. And then you need to put some steps in place. First of all, understand what your situation is, and then put some steps in place in order to get along that path in order to achieve your ultimate goal.
That's right. That's right.
Awesome. So thank you for that, David. So if we're thinking about real estate as investing, the action, it's the activity that needs to happen and when. And then your plan are basically your objectives and goals, what you want to achieve. So looking at, say, a real estate action plan, what's included in such a plan?
So real estate action plan is really drawing out, what do you want to achieve from investing in real estate? Some people just want to invest in real estate just because they heard it's something cool to invest in and they want to be in that in crowd. There's others that strategically want to invest in real estate because they want to pass down property for their kids. So we need to understand, where are you? Where do you want to be? When do you want to get there to your destination? Is that 5 years? Is that 10 years, 20 years? And then we can pair you up with the right strategy that fits your goals and fits your timeline. So that's what's the importance of a real estate action plan, because we want to know where you are today and where you want to be in the future.
Got it. Got it. So if I were to sit down and work through a real estate action plan, what would that entail? What can you expect when you're going through one of these?
So it's nothing too daunting. Everything you already have it. We just don't have it, right? So we
Awesome.
need to get it from you. So one of the main things that we're looking for is, what do you qualify for? So we want to sit you down with a investor focused mortgage broker. Okay. Someone that can look through your finances and say, hey, look, you have this much income. You get this bonus every single year. You have this credit. You have this available down payment. You can probably even get more money from friends and family to achieve the goal that you want. How can we get you into that first property? Or if this is your fifth property, how can we get you into that sixth property? Because we want to structure these things, because when you're buying a property, sometimes if you're planning to buy 20 properties in general, there are certain lenders that we need to go to first. So if we can map that out from today, then we can figure out the exact same steps that we need to get to those lenders and to get to the amount of houses that you want. So that's where the real estate action plan starts. It starts with just pulling all your information, getting all your income, and then knowing exactly where we can place you.
Okay, awesome. So I know I've done some real estate action plans with some of my clients. So this is one of the first things that I think is really important to understand the client, to really understand who they are, what is their motivation. As you say, everybody has a different goal. Some people want passive investment. Some people want to have a property and hold on to that property and have that long-term growth opportunity. Some people want to buy and flip. Others want to have more real estate investment trusts. So the various vehicles that are available to them. So really kind of getting to understand and know the client. So understand what their what their profession is, what their current their income is, understanding those CID, the credit, the income, and as you mentioned, down payment, but maybe holding off on down payment first if you go in more of a structured format. Just really understanding who you're working with and understanding what motivates them. So what do you have to say to that? How does that help in terms of putting together that strategy and those actions that need to occur?
It really helps if I draw on some of the experiences of some of the past clients that I've put through real estate action plans. Someone might come to me and they'll say, look, I'm working full time. I'm getting ready to retire in the next 5 to 10 years. I have money, but I don't need it today. I want it to build wealth for me. I'm busy. I don't want to have to go to a lawyer's office. I don't want to do this. I want to be able to travel the world, things like that. So then, right off the top of my head, we're going to go through all the different real estate investing strategies. Obviously, for that particular person, fix and flip is not for them because they don't want to be involved. They want to stay at their full-time job and they don't want that headache that some people perceive as a headache, whereas some people perceive it as a gain. So we're looking for something more passive for that person. So that could be mortgage lending. That could be buying a property and holding it. Things like that. That could be jumping into a REIT. Something like that. For the other people, they might be like, look, I want to replace my income from work. And I want to be able, if I'm confident that I can replace my income from work, then I want to do this full time and I want to transition. Well, maybe that is more ideal for someone that wants to do a fix and flip, because when you do a fix and flip, you're in it for maybe 6 months. You can come up making 20, 30, 40 grand. If you can do that 2 times a year, a lot of times that can replace your income. So it really depends on what their goal is and really what they want to achieve and what their temperament is, what their character, what their character is. Some people don't want to touch these things and some people do. So it's important. So that's how we align them
Awesome.
to different strategies.
So the understanding right off the bat, their motivation, what their long-term and what their long-term and their short-term goals, because those two goals may be different, and there may be opportunities for the client to do both, or you time it in order to maximally achieve their investment return on investment.
That's correct.
So that's kind of like at the beginning, getting to know your client. Additionally, there are other aspects in terms of understanding your client, such as the investments that they currently have. They potentially could have TFSAs, they could have their RSPs, they have defined pension plans from work, they could have other investment vehicles that are available. They could also have properties, various properties, some properties that have some cash flow, and maybe others that have just, maybe they're cash flow neutral, but potentially, they have gained a lot of equity over time that they've owned it. So really understanding what that financial portfolio, not only their income credit, but now going a little bit deeper and understanding what other assets they have in order to potentially look at other ways of thinking through the strategy and the steps that the individual might want to take with regards to the action plan. So I was wondering, David, if you could maybe give an example in terms of how, I know you gave the example of somebody who's looking to retire, but how about somebody who's looking to retire and maybe they want to either gift money to an adult child to do an investment, or maybe they want to go into an investment with an adult child. Can you maybe speak to, what options may be available to somebody in that situation?
So we see a lot of families actually pairing up to buy investment properties. It's a great way to buy investments because there's trust, and that's at the bottom line what you need. Now, in regards to doing it with a kid, we just need income, right? So if both parties have income, then that's what we can do. The contracts can be more casual instead of less official. They can be more casual joint venture agreements just to make sure that everyone knows what they're doing. One person might be handling the property management, one person might be going on the mortgage, things like that. So that's how we can do those contracts. But it's a great way to build generational wealth and to keep it into the family. And we go through the same process. We make sure that the goals are aligned for both family members, and we see what each person can bring to the table. Sometimes, let's just say, for example, it's a mother and a daughter, right? Sometimes the mother will be the one going on the mortgage, but the daughter will be the one that has the down payment, right? So we figure out the strength of the file of each individual, and then we pair that up, matching that together, and then we'll set them straight to get what kind of property that they want to get into.
Excellent. So in terms of these potential joint ventures, whether it's within families or even somebody who's outside of the family, having the roles and responsibilities and accountability for each individual clearly defined. That's really critical. So another point with regards to the joint venture, I'd like you to delve a little bit deeper. How important is alignment on the motivation and goals for people who are coming into a joint venture?
It's crucial. It's crucial because you don't want to go into a project where you have in your mind, you had a long-term vision that you're planning to hold this project for 20 years.
Right.
But someone else just wants to make X amount of dollars from it. So when the market rebounds and they see that target price that they can sell it for, they're like, hey, well, let's sell this. That's where we see a lot of the conflicts when the long-term goals are not aligned, right? So it's important to get all this stuff out up front. Right. Before we spend a dollar on lawyers, putting anything down, tying up any properties, we get all the expectations up front and we just put it in some sort of casual agreement if it's family.
So just in terms of alignment on the goals and motivation, what's the process in terms of documenting that and making sure that everybody has a clear understanding? I know you say casual document, but it is a document, and I'm assuming it is a contract. So how is that delineated, and how is that enforceable? Or just, Because people, sometimes things happen, people change their mind, which
Yes.
is fine. And then there are times when circumstances change, which obviously is, something that's unfortunate. But what of the situation where, somebody just changes their mind? Like, how are those kinds of situations handled?
So in a situation where people change their mind, usually you add like some sort of buyout clause. So it gives the other person the first right of refusal to refinance the property, to take the property over without it having to be sold publicly. When it comes to these contracts, we always make sure that they sit with their lawyers and the lawyers go through and prepare these contracts for them. A lot of these contracts, they can be registered on title as well. So what that means is in the event that someone passes away or something like that, when a title search is completed, they'll see that there is a contract registered on there. They'll contact the lawyer and see, okay, this is what the contract outlined, who was, mama's portion supposed to go to, who was daughter's portion supposed to go to, things like that, just to safeguard all parties. I find with families, sometimes we don't want to go down the route of getting a lawyer involved and putting in a joint venture, but the way how I look at it is, if you want to keep and maintain that family, it is better to lock it up as best as you can to keep everybody honest.
I would 100% agree with you. Everybody has best intentions. However, having it in writing and something that can be executed with nobody complaining is probably the best route to go.
Yes, I agree. I
Awesome.
agree.
Awesome. Excellent. Thank you. So I want to pivot slightly in terms of this real estate action plan. You mentioned some individuals in here, and I wanted to talk about the team. So once we kind of have a really good understanding of what motivates you, what your goals are, both long-term and short-term, then we're able to kind of understand who do we need to involve and when. So maybe you can speak to that for us.
Definitely. So at the beginning of the real estate action plan, we need to have an investor focused mortgage broker, right? I'll raise my hand for that one.
All
Okay.
right, thank you.
No,
I'll keep you in
no
mind.
problem. So, but we need to have a investor focused mortgage broker because again, we want to dig into the finances and see what's there, right? And pull out that information. And most clients feel comfortable speaking to someone that's licensed with the banks and stuff like that to make sure, and mortgage broker to make sure that, all their information is safe. Next, once we figure out that the plan, then we also need a licensed real estate agent because we need someone that's going to go on MLS. They're going to go door to door. They're just going to drive around areas. They're going to have that property and market intelligence so that once we figure out what strategy the client wants to do and what property we need to fit that strategy, we need that real estate agent to go out there and get it. Once we get past that stage, we always need the lawyer on hand. So it's best to be in contact with the lawyer before we start going down the process. We just let them know, hey, you're going to be our lawyer of choice. We figure out what they're going to cost, what are their fees going to be, what is their process going to be like. And then we tell them, okay, once we're ready, we will send you the deal. So this is all just in the preparation work. Once we get closer to finding the property and we decide, we get excited and we put money down on a property, then we're going to need appraisers and inspectors. So we need an appraiser because we want to know today's market value of the property. We don't want to pay yesterday's value and we don't want to pay tomorrow's value, right? Unless it's to our benefit. But we want an appraisal to know what is the value today. Are we paying the right amount? Because when we're borrowing money from lenders, banks and stuff like that, they are going to be lending based on the appraised value of today. So we need to be aware of that. And then just as a safeguard for ourselves, we want to employ an inspector. So again, this is something where we should have probably been interviewing inspectors before because different inspectors have different depths of what they do. Some inspectors, they'll go on top of roofs, they'll go in attics and everything like that. And some investors will just kind of like do a walk around the property. And not saying any is better than the other, but what works for you, right? So we want to find that investor focused inspector that suits what you're looking for. And then we get that investor.
Assertive.
Yeah.
A certified property
A
inspector.
certified property, just like the appraisers, they got to be certified.
Exactly.
So,
Certified,
yeah,
yes, with experience.
exactly. So once we get that inspector involved, we put an offer in. As soon as we put the offer in, we're getting an appraiser out there. We're getting an inspector out there. They're gonna tell us the market value. This we're doing our due diligence. That's what we're doing, right? We're gonna see what the value of the property is. We're gonna see if the property has anything of concern that we need to know about, right? So that's gonna be two expenses that we're gonna pay out of pocket, just looking for each property, and then that's it.
And then, so that's kind of more of like the standard approach. So if you're having purchasing a pre-construction property, you would want to have that lawyer on hand right away, someone who specializes in reviewing those pre-construction contracts, because you have that 10-day cooling off period, and you would want to make sure that they are addressing the key elements that we're looking for in turn for the particular property. And then, and on another end, for somebody who's maybe looking for a fixer-upper, maybe having a contractor or somebody that is trusted who can provide you with some estimates. If you as a purchaser do not already know that, having someone who's able to come in there, take a look at the property, see how much money would need to be invested in order to bring it up to where you want it to be, to either sell it or to rent it out, or whatever you might want to do with that particular property.
That's correct. You see, it comes down to strategy again, right? So if you're going to be fix and flipping, you need that contractor in there to quote you. If you're going to be buying condos in advance and holding them for 2 or 3 years and closing on them later, then yeah, you need that lawyer that's going to say, hey, make sure that the assignment clause is in this contract. Make sure that you have your 10-day cooling period. Make sure that there's clauses in there that the developer can't, there's a limit on how much they can charge you on closing,
Yes, the cap rate.
right? Yeah, cap rate, or you want to know exactly what is going to be your cost on closing, stuff like that. What are you going to be responsible for?
Exactly. And potentially your ability to occupy or to lease during the occupancy period before closing, if you
That's
are
right.
looking as an
Yes.
investment and not living as for your own property. Okay, awesome. So we have, we have a little bit in terms of we understand who our client is. We understand what assets or what their portfolio looks like. We understand what the short-term goals are and what the long-term goals are. And then we're looking to see how can we help you achieve your particular goals based on a set of strategies. So based on a set of what's available. So, the best laid plans, something, always happens. So,
Hear the punchline coming.
everything's going along fine. You have your plan, you have your timeline. Maybe it's going to be a 2-year timeline where you need to save up some down payment, or maybe you need to have higher income, just little things that need to happen along the way. Obviously, we're in a dynamic real estate market. What happens if things change? If, say, as we've seen, interest rates, or we go from a buyer's to a seller's market, what are your thoughts with regards to having a real estate action plan and being able to pivot?
Yeah, they always say everything goes right until you get punched in the face, right? So, yeah, it's no different. The good thing with a plan, right, is and I always like to think of it as, we're our GPS in our car. So, we all said, hey, let's meet a group of us, 20, let's go to CN Tower, downtown Toronto. We're all coming from different areas, Milton, Mississauga, Oshawa, Pickering, and we have a plan to get down there. We punch it in our GPS when we get in our car. It says we'll get there in 25 minutes, and we start driving. Now you get there, there's an accident on the 401. Things happen. What do? You either wait in the accident or you turn off. You get down closer to the CN Tower, there's construction, the roads are closed. So you pivot, right? That's what you do. You pivot. So as long as you have a plan, it gets rid of that anxiety, because you know that you're in this for a certain amount of years, and you know that you're going to have to pivot along the way. The confidence comes in having a team, right? Because if you have a team, you can rely on your team for these pivots. If you're going into a fix and flip property and you go in there, you find out you need a new roof, you have a team, right? You can get someone to fix that roof, right? And then you can refinance the property if you need to cover the expenses of the roof after it's fixed, and you put enough value into the property and stuff like that. So once you have a team of people around you, you can eliminate a lot of this. It's just like when you punch in your GPS, right? One of the apps that I use on my GPS, it'll tell me there is an accident on the 401, and it gives me an option. Do you want to continue going on the 401, or do you want to make a left? And just avoid that accident and then jump back on the 401. So I use that, right? That's a part of my team, right? So it's the same thing with real estate investing. There's never a guarantee, right? But with real estate, we have a history of over 40 years. So although there's no guarantee, we have some sort of predictability. But we know not everything is going to go perfect. But as long as you have a team and you have that knowledge and you're ready, we can pivot and get to where we need to get to.
Exactly. Thank you. I love that analogy. And also, when you have the information, the knowledge, and you're prepared, you're more able to pivot and make decisions quickly because you have the information in order to make your decisions. And you can say yes or no, I'm going to wait it out. I think it's going to clear up and move along. Thank you for that, David. So, David, I have a question here. So I personally tend to do my real estate action plans before, recommending mortgage broker, etc. So I want to get what your experience is like when you deal with someone who has a plan, an idea. They might not have all their financials, but they have an idea of what they want and an understanding of what that process is, and having a team, versus someone who just comes to you and they have ideas, but there's no grounding, there's no plan.
So what's the difference you're asking?
Yeah. What's your experience?
It's we can get more value out of the conversation if they do some homework up front. Because if they do the homework up front, then I have that intelligence to pour more into them and direct them into the way that they want to go to make them win. When they come and they just don't know what they want, that's fine as well. So the first initial meeting will more be surrounded about giving them ideas, giving them some homework for them to go back and think about, and figuring out which strategy resonates with them the most, right? But if they can come and they say, look, I think I want to make X amount, I have this sort of time frame, it doesn't have to be exact, just have something in their mind, then we can really use that conversation and really direct them the way they want to go.
Awesome. Efficiency.
Yes.
Awesome. All right. So any last thoughts in terms of the real estate action plan, why it's important, how it's used, ideas?
Yeah, no, the real estate action plan is an excellent vehicle. We use that to start the process of investing in real estate. What I find is people delay executing the real estate action plan and delay signing up for real estate action plan because they feel that they don't have all the pieces of the puzzle. You do not need all the pieces of the puzzle. You do not need the full staircase in front of you. You just need step one, that motivation, that want to do it. It's funny because when you go to a lot of these seminars and books and stuff like that, a lot of people say, I didn't do a real estate action plan because I didn't have any money. There's so much strategies out there that you don't need money. Some work here, some don't, but you don't need money. Some people might say, look, I know my credit was no good, so that's why I didn't do it. Don't disqualify yourself. Come on out, get a real estate action plan done, and there's ways to overcome every single obstacle that's out there. And the beauty of going to a real estate action plan is because we've gone through these real estate action plans, Nicole, yourself, with many different clients. The obstacles that they may perceive are there. You've probably already conquered that with another client. So now you can take that same advice or that same solution and apply it to this client. So come out and get a real estate action plan completed. You'll never know until you get it done. What's the worst that can happen? The worst that can happen is, you get 3 or 4 doors and you start making money in real estate, right? So that's not that bad, right?
That's awesome.
Yeah.
Thank you so much, David. I really appreciate the time you took to discuss the importance of having a strategy, a real estate action plan, and explaining that you don't need to have all the answers. You just need to take that first step to move forward, and then pivot as needed. And then really focusing on starting with the end in mind, that it's critical to put the right strategy for your circumstances, and that your realtor or your mortgage broker will help you to walk through your goals and your situation and help you strategize what may be the appropriate steps that you need to take in order to assemble that power team, and also to get to your goals and make high quality decisions in a timely manner.
Exactly. Well said.
So today I started off with quotes. Today is my quote day. I really love this from Dale Carnegie. He said that inaction breeds doubt and fear. Action breeds confidence and courage. And if you want to conquer fear, do not sit at home and think about it. Go out and get busy. I totally agree. I think it's important for you to learn as much as you can so you can prepare and you can build your confidence in real estate investing. Whether it's buying as a first-time buyer, as a buyer second time, a seller, or a seasoned investor, knowledge and strategy empower you to get it done. Like what you hear? Follow us on your favorite podcast app today. Leave a rating and a review. I would like to recognize the efforts of my producer, Stories and Strategies, for their great work. The last thing you can do for us is share this episode with one friend. Thank you.